All right, so let's go ahead and continue on with this study guide and see how much else we can finish up. So here we are, QuickBooks Managing, which is going to be 6% of the exam, so approximately 3 questions. So what does this entail? Well, first one is going to be how to manage lists. Okay, so customers, vendors, items, and etc. So the first one this is more asking for is the general idea. How do we add? How do we delete? How do we edit? And what if we need to merge? Okay, so first off, let's just talk about the general for like lists, so items, okay? The chart of accounts. How do we add new entries? How do we add new entries?
Go to homepage, click chart of accounts, right click and click new.
Good, right? That's one way. So whether you go home page chart of accounts, you can right click anywhere and click new. Excellent. That's how you can enter in. So right, I'm just gonna go to any list, right? And your general thumb is right click anywhere and select new. Okay. What's the general one that is taught in every single, or the general one that is taught in the book? How do I create or add a new entry? Okay, I can see you guys are still there. How else can I add a new entry? Anybody? On
Can you repeat it one more time?
how do I add an entry on a list? So in this case, I'm on my chart of accounts. How do I add a chart? How do I add something to my chart of accounts?
Add to the chart. Oh, you go to your home screen
No, not on the home screen.
and then go to your chart of accounts, or you can go to your is it the? Can you click on edits
Can I click on edit? Let's see.
or the view edit? Go to edit. That's view. You say how do you get to your chart of accounts?
No, in this case, no, not get to my chart of accounts. The question is, how do I add something to my chart of accounts?
To
Who
the
is?
chart of accounts.
Oh, there's. Who
Oh,
is?
do you go to your preferences?
It's no, it's not a preference. So I'm in my chart of accounts right now, right? How do I add something to my chart of accounts?
Um, how do you add something? When you set up your interview is how you but okay, so now you want to add something else after the interview.
Correct.
Hmm.
Orlando already gave us the first one.
So right now, are we on the list menu of
We're
chart of accounts?
we're already on my chart of accounts. How do I add an account?
You right click on the account that you want to edit.
That's to
That's a
edit
good one.
an account.
Okay.
I'm asking to add a brand new account.
Oh, that one was you go to your is it the edit menu?
No. Well, I mean, yes, you can do that too, but
And
what
you click on new accounts.
that's another way. But the one that your book actually tells you to do, that is applied in every single list that you can create.
That would be an item.
It could be an item. Okay, so what would you do? What's the general rule of thumb? How do you add an item?
Go to your list. Bring down your list menu, the list on your menu bar. Yeah, right there. Click on that.
Okay.
Items, item list,
You,
and go one more over to go two over to edit. Copy account, edit, new account. Go down to new account.
okay. All right. I said okay. Yeah, that's a way, but I'm talking about what the book tells you. What else? What's the third way to add a new account?
Tracker. Third way. I don't know. You got me on that list. I give up.
Anybody else wants to try? This is universal for every single list that you are going to be creating. So if I'm on my items list or on my sales price list or my sales tax code list or even my terms list, how do I create a new entry? Well, we already figured out the first one, which was to right click anywhere on the list and click new, right? We also figured out that there's an edit menu that you can click and you want to add a new account. Okay. But the general one that you want to do that is taught in your book is to go down to the bottom of your window. What are your options
Oh
down below?
yeah,
You
say
got,
new.
yes. So in this case, I'm under my chart of accounts. I click accounts and it will give me a drop off menu and it will tell me to add a new account. Okay. So that is going to be, so we have edit menu. New account. Or you go bottom left window. Click drop up. Select new. Okay. And of course, those are the exact same ways that you can edit those things. So, you know, copy and paste it right here. But when can you edit an entry? Is there a particular time frame you need to edit your entries?
You say when can you edit it?
Correct.
After you enter it. Can
Okay.
you only do it like after you enter it?
Uh,
Enter it and then you want to edit it to change something?
okay, for example, can I change my customer's profile?
Yes.
When?
Anytime.
Anytime. Great. Excellent. And you can edit any item, account, customer, anything at any time. Okay? You don't need, there's no specific time. You can change information at any given time. As long as you know how to, right click on the item and edit. You have the pencil icon in the customer center or the vendor center, wherever you are, right? If you're trying to edit something under a list, maybe you select that item and click on edit account or edit item. You can make changes at any given time. Now, what's the rules about deleting entries? Because there are rules in order for you to be able to delete. And what rule is that? What is the rule of thumb on deleting anything in QuickBooks?
You're not supposed to delete, right?
You're not supposed to delete. They tell you that, but what if it's circumstantial? What if it's like because XYZ? What gives you the validation to be able to delete an entry? But yes, that's good. You should never delete anything. But what is the rule here? If you had a choice.
Isn't it only up to the manager that can give you the authorization to delete? Was it like that?
Okay, what if you're the admin? What if you're the accountant?
Oh, then you should be able to.
You can hide items but never
Oh yeah.
Okay, and then what do we call that? What's that word?
It's just because if they want to go back to us, like just what is called inactive.
Inactive. Good.
Yeah.
Good. Right? So that's a clause. Okay? So you can that's if you why would you choose to inactivate an account?
Because if they don't don't call us for like long time, or they don't do like business with us, we don't want to delete them, but we want just to be inactive them, just to make the list.
Okay, okay, good. But my question here is what condition must you meet in order for you to choose to inactivate?
To make the list is shorter, or like to make the
it has nothing to do with appearance.
No activities or transactions.
Not to minimize transactions, no.
No.
There's a condition that must be met for why you would need to inactivate an account.
Your contract with that particular person is over?
No. Okay, so in
like
this...
when they call us to say we don't want your business anymore?
No. So let's say I do use that person, right? And then that's the reason why, right? Because I use that person, right? So if they no longer want to do anything to do with me, it's been 5 years, and I choose to inactivate them, why would I choose to do that instead of just deleting them?
Because the account is inactive.
No.
Bad
Don't you
debt.
have
No.
like a period of time that you shouldn't delete things? You should always keep them in case you end up getting into a problem with them?
Yeah, okay, no. Okay, you were treading on a very you were getting very close, but you end up skewing right off. So in this case, no. The reason why you would inactivate them is because if you delete this entry, it will affect all of any kind of whether it's an income that you receive from this customer, it will affect your customer statements, it will affect your income or the cash flow that you got, because by you deleting a transaction that you have used, you're basically taking that account and saying it doesn't exist anymore. So all the transactions that you used with that particular account will pull in holes, and you will mess up your entire books with that. So if I had a transaction, right, that used a particular account and I just delete it, It's as if that transaction never happened. Well, don't forget, a transaction is a chain reaction. What if that transaction was linked to multiple accounts? Then those multiple accounts are affected. And if those multiple accounts are affected, then it creates a chain reaction. And then it affects another account, affects this person, and affects that person. Okay? So deleting entries that you have used is a big no-no. Well, and they
So
give you
excuse me, I'm sorry, Ned. So it will affect the other spreadsheets,
it. Okay, so if what's the purpose of having customers? You sell a product to them, right?
right?
If you delete them, that means you deleted their sales, you
All
deleted their
the
invoices, you deleted the
mhm,
cash money that you received.
right,
Is that
and it'll
correct?
throw everything off. It'll throw everything off through the whole spreadsheet.
100%.
Oh wow.
Yeah, so if you delete a customer and let's say you had a few invoices with them, that affects the invoices, that affects the accounts receivable, that affects the received payments that you have, that affects the deposits that you've put the money in. That throws off more than one account because that one customer, because you just sold to that customer, that one invoice affects your entire business. So in this case, if it has been used and you decide to delete it, you will cause problems in your QuickBooks and you won't be able to salvage it unless you either open up a backup file prior to deleting. So in this case, the rule of thumb here is you can only delete entries if the entry has never been used. Okay? All right? If not, if the entry has been used, you have two options, right? You can inactivate entry or you can choose to merge. Okay? So that's where this one comes in. All right? What does merging do? Okay, in this case, if I have multiple accounts, right? So for example, right, we in this chapter earlier on when we taught you in chapter 12, right? I created a software account when I had a computer and internet expense account. Do I need to have a separate account for computer and internet expense when I have and I have an extra account for software? Isn't software fall under the categories of computer and internet expenses?
Yes.
So in this case, they give you the rule of thumb is, well, I'm not going to delete software because what if I used software to make so many purchases of other areas? So then what can I do? I can merge the accounts together. Now, how do I merge these accounts? There's a particular way to do it. How do you merge entries? How do I make two accounts become into one?
You go to the list that has the entries you want to merge,
Okay, and what's the step after that?
copy the name of the entry you want to keep.
Copy the entry that you want to keep. Copy that where?
Well,
You're
we're at the chart of accounts, right?
okay,
So,
let's use the chart of accounts for example, okay?
okay.
And let's say I want to merge land and leaseholders together.
So you can only merge accounts of the same type. Is that what you're looking for?
That is
They have to
correct.
be in the same field.
Okay. All right.
Okay.
So let's say I want to merge buildings and lands together. How do I do that? How do I make land become part of buildings and improvements.
So you want to right click on the account you want to merge with the account you're keeping. And you paste the name of the account you're keeping over the name of the account you want to get rid of. Save and close.
Okay,
Too much?
that was very vague. So you want to right click and do what? What are you going to do when you right click on them? Are you going to just click merge? How do I merge them together?
Right click and edit.
Right click and edit. Which one am I choosing? The one I want to keep or the one I don't want to keep?
The one you want to keep.
The one I want to keep. So if I want to keep buildings and improvements and I decide to click edit the account, what am I going to edit it to?
You have to have the account number for it.
Okay,
You
so
look at
all right, so look here. How am I merging my land account into this one?
Do you make the other one inactive?
No.
No.
You need to know how to do this, and you need to know the exact steps because you could be asked this on your certification exam. So in this case, it makes no use to edit anything from the account that I want. Okay, so Maribel, plug it in. You said copy and paste the information that you want to keep for the account that you want to keep. And then select save and close and merge. That is correct. But which account am I editing?
So we want to copy the name of the account we want to keep. You right click on the account you want to merge with. So I'm a little confused because I don't have my book. So
That's
So
okay.
you're
Just
editing the account that you're merging it with.
so is that the account that I want or I do not want?
That's the one that you want.
Wrong
so
again.
am I gonna
Wrong
get a
again.
message? Am I
Say-
gonna get a message that says this name is already being used? Are we going that way?
Yes, and you're treading on the correct answer, but the only concept here is you're missing step number 2. Out of the steps that you just said, you are 100% correct. You're just missing step 2. Am I editing the account that I do want or editing the account that I do not want?
You edit the one you want to merge, or you copy it.
So is that the account that I want or not, or I do not want anymore?
The one you do not want anymore.
The one you do not want anymore. So in this case, let's say I want this to be this account land, right? I want to merge it into buildings and improvements. So in this case, let's take a look. It is 15200 and it's called buildings and improvement. So in this case, I'm going to right click my land. Okay, let me memorize that. 15200 buildings and I'm going to edit this account, right? And I'm going to copy and paste everything that I want to the account that I want to keep. So in this case, I want this to be merged into buildings and improvements. Okay, and the account number was 15200. The minute I go ahead and click save and close, I will get a
Now it's
window.
yours.
This one says, this account already exists. Are you looking to merge it? And I say yes. Okay. Once I merge it, land does not exist anymore. It became buildings and improvements. So in this case, you got every step correct except for step 2, which is you need to select the account you do not want. To be able to edit it, copy all the information for the information that you do want. Select save and close. It will give you a message that says this account exists already. Are you trying to merge them? And you say yes. So in this case, that is the exact steps on how you do that. All right. So to merge accounts, you need to select the account you don't want, okay? And edit the account to copy the info from the account you do want, okay? Save and close, right? And you'll get a error message. Account has account already exists. Would you like to merge? And you say yes. Now, what's the rules about merging? So Kim hit the first one. You can only merge accounts in the same from the same type. That is true. What else should you know if you choose to merge an account?
Kind of that it's irreversible once you do it.
Correct.
You can only do it once.
Yes, good. Correct. You can not undo a merge. Irreversible. Good. All right. Okay, so that section is done. So let's see. Next section here is going to be items, which again, we didn't talk about. So we're going to skip this whole entire section right here. Okay, so that means we'll come back to this in 2 weeks from now. Okay. Sales. Sales is going to be 10% of the exam, so approximately 5 questions. So let's take a look, right? We did the entire sales, so chapter 2, chapter 3, and chapter 13. Okay? So let's go ahead. Chapter 2, sales. Who should be on the list of your customer center? Straightforward answer. Who? Who belongs onto your customer's center? Who belongs onto your customer center?
Customers.
Okay, so be a little more specific. What determines customers? What makes some customers?
A sale.
Sell. Good. People you sell a product or service to. Good. Okay. How to use and navigate the customer center. Okay, so that's a question you need to be able to answer. So again, what does it look like? How do you use the customer center, right? Straightforward. You identify, what does it do? Well, when you go to the customer center, what do you find? You find a list of all the people that are on there with their respective account balances, right? Customers. So again, customers list with the account balances. You have their info at the top. You have a list of all the transactions that's between you and the customers. Now, how do you navigate this? Well, there you go. You want to look up customer information, you just click on them. Now, what is the most crucial portion of using the customer center? Why do you use the customer center? What transactions can you enter using the customer center?
Estimates.
You can,
Invoices.
correct, right? You can use the customer center to enter estimates, invoices, sales receipts. Good. All right. So that question answers that section there. Make sure you know the ins and outs on how to navigate that. Okay. So then our next section says how to complete the workflow from sales to making the invoice. So in this case, let's focus on what first, and then we'll go ahead and talk about the connection. So, invoices. What are invoices? When do you use invoices?
A sale that is to be collected.
What do you mean by to be collected? Did the customer pay right then and there, or did they pay later?
Pay later.
Good. You only use invoices when customers pay after the sale. Okay? And then once we do this, so in this case, the accounting behind the scenes is when you use an invoice, it will increase accounts receivable. Okay? Now, so now we're going to be following the line through, right, on the home page. What follows after creating an invoice? You need to receive payments. Okay? Straightforward. Okay? When do you use sales receipts?
Those are normally paid up already, either by cash or credit.
Good, right? You only create sales receipts when customers pay at time of sale. Okay, that means you've collected the money right when they pay you, right then and there, and right when you're recording it. Good. All right, and deposits. Okay, straightforward, right? The flow of business, the flow of line here is you're going to create your invoice, you're going to receive payments, right? Receive payments. What does it do with the accounting behind the scenes? It will decrease accounts receivable. Okay, so again, rule of thumb here is you must use receive payments to reduce or pay off invoices. Okay? Rule of thumb. Because you cannot use deposits. You cannot just say I collected a check and just deposit that money right away because it makes no linkage to the invoice that you've already entered in there. So in this case, in order to decrease your accounts receivable, you need to use receive payments. So then what does deposits do? Straightforward. It puts the money into the actual bank account. So again, deposits collect the money, collect payments until you deposit to the bank. Okay. How does QuickBooks use the undeposited funds account to checking? So in this case, how does it use it? So in this case, this is like a journal transaction, right? So think about it. If you're collecting money, if someone bills you, or sorry, sends you money through the mail, right? And you have a whole pile of money in your drawer. What do we call, what account does QuickBooks automatically associate that money with?
Is that petty cash?
Not petty cash. This is, you received money from customers. How's that petty cash?
Oh, my bad. Okay, so repeat the question one more time. How QuickBooks uses the undeposited funds account to the check. So would that be dormant?
What do you mean by dormant?
It'll stay there until it's closed out at the end of the year?
Do you, I mean, if you're saying you bill all of your customers and they decided to pay you, you're going to wait till the end of the year
No. Okay.
to put
Because
that in your
well,
bank?
You would have to make another item in your chart of accounts and say it's other current asset.
No.
No?
No. The undeposited funds is going to be considered an undercurrent asset, correct? But so basically the question is asking, how does QuickBooks collect your money, and then how does it put it into the bank? Well, that's exactly what it's doing, right? When you my idea is I'm trying to use a real life concept, right? If customers decide to send you money through the mail, and you open up all your envelopes, and now you have 4, 5, 6, 7 checks. What account does QuickBooks recognize that right now? If you receive payments,
Undeposited funds.
undeposited funds, okay? And what do you need to manually do?
Deposited.
You need to go to the bank and deposit the money. So that's exactly what you're doing. So when you click on record deposits and you have the list of checks, what are you manually doing? You're manually taking the undeposited funds and transferring the amount into checking. That's what this question is asking. Is how does it use the undeposited funds to the checking? Well, it uses the undeposited funds account when you collect or receive payments from customers. Okay. Okay. Right? It when you receive it and actively use a sales receipt. So in this case, I'll put parentheses. Use sales receipt or receive payments. Right? Where does it drop it into? It drops it into the record deposits bucket. Right? And you have to manually select all the checks, select all the cash that you're depositing, and deposit it into your checking account. And what does that do with the accounting behind the scenes? When you select all the payments in your deposits icon, right? And you say deposit, it takes the undeposited funds and transfers it to your checking. That's all this question is asking. It's asking you what the accounting
You
behind the
have to
scenes
do
is.
manually.
You have.
It doesn't do it automatically. You have to do that manually.
It's the same thing, right? Is the checks that's going to be on your desk magically going to go into your bank account?
No.
No, you have to physically go take it to the bank, right? Or
Right.
nowadays they use mobile banking, right, where you could just take a picture. Then yeah, in that case, that's the same idea. You still have to physically take those checks or physically take a picture of those checks and manually put it into your checking account. It's not going to appear in your bank account unless you do credit card transactions, right? But in this case, no. If you're if you have an in-store sales, right? What's the cash in the register going to do? It's just going to sit there. Shouldn't you be wise enough to put that money away into the bank so you can pay your bills? Right.
Right.
Right. So in this question, it's just a very basic, behind the scenes kind of ordeal. So let me go ahead and finish this up. Okay. Okay. And deposit money. It will transfer from undeposited funds to checking. Okay. All right, question for chapter 3. Okay, so chapter 2, that's pretty much majority of what we did in chapter 2 was how to use an invoice versus a sales receipt. How do we deposit the money, so on and so forth. Okay, you should keep expanding on this because anything's fair game. Okay, so that means explore the different ways. How do I enter in a sales receipt? There are 6 different ways, right? How do I enter in an invoice? There's 6 different ways. How do I receive a payment? There are 7 different ways. So make sure you explore all those options because you could be asked any single question, okay, in terms of navigation. Okay. All right. Let's see what the next one says. It says right here, Chapter 3, additional customer transactions. How and why to record customer credits. So in this case, I gave you the why, right? Now the question is how. Okay, so this is the why. Why would you record customer deposits? Well, if they need to make a refund, if they overpaid, if they have bad debt, right? Well, the question is how. Okay, so I'm going to go ahead and do bad debt as a separate one. So how? How do I create a customer credit? What do we call those? What do we call a customer credit?
A credit memo.
Credit memo. So, how is by creating a credit memo? Now, how do you create a credit memo? How do you create a credit memo?
Okay, it would have to be a cancellation of an order, return of merchandise,
Uh-huh.
credit on the credit on the account,
Uh-huh.
or to record the first step of making a refund to a customer.
Okay,
Is
so
that
that's
right?
that's the why.
Well,
We
you
need to
said
go
how.
to
Yeah,
You
well,
want to
yeah,
know
how? How do I create a credit memo on QuickBooks?
we need to go to refund credit.
Okay, where do you find that? On the home
It's
page?
yeah, it's customer information. Like we go to look for the customer
Okay.
from customer, and after this we select the person who was like who we need,
Okay, so
and
I'll
we
do
go to
Maria Cruz.
uh-huh we go to invoice number, which one we want to do if they have like more than one,
Okay.
and after this in the top is going to be refund credit.
Good. Excellent. That is correct. Okay.
Yeah, real
This is
good.
the date today.
All right. So there you go. And there you go. You create a credit memo. Now, this is the best way to do it because what you're essentially doing is if you are creating a credit memo for a particular invoice, you have all the information. And by doing that, you transfer the information over. So it makes it that much more easier to file the credit memo. But what if this was just a regular person that bought something from your store and they said they decided to walk in, you don't have an invoice with them, and they just want you to return a product.
If they pay with the credit, we need to pay them with the credit. If they pay with cash, we could pay them in the cash.
Okay, all right. But my question is if a person decides to walk to my store, they buy something, right? And then they come back and they want to return it.
Uh, they want to
That'd
return.
be a credit memo.
How would I be able to create that? If I don't even know who the person is and they're just someone who just bought something from me.
Sorry, y'all.
No worries. So,
Uh,
how would I create a credit memo if I don't have an invoice?
mm, I believe we don't refund the money.
So you're saying if I'm a customer and I'm gonna buy something from you and I want to say, hey, I want my money back. You're not gonna refund me my money.
Because if you don't have the receipt, how do I know?
Well, there you go. You do have a receipt,
Mhm.
but I'm not someone you invoiced. I'm someone who just purchased it right then and there. So how do I issue a credit memo there? Because you just showed me if you have an invoice. Well, what if I don't have an invoice? You never billed me. I bought the item right then and there. How do I create a credit memo that way?
Go to the credit invoice window.
Credit invoice window. I just said you don't have an invoice.
You don't have credit
Um, can you
refund
go
credit.
to customers menu and create a credit memo?
You
Good,
don't have
right?
credit.
Customers menu and create a credit memo. Right? If I don't have a particular person that I invoiced, how do I create a refund or a memo? Well, that's straightforward. You just create a credit memo. So in this case, it'd be create credit memo or refund, right? Right? In this case, do they have to have an invoice? No. If you do have an invoice, it just makes it that much easier to fill. But in this case, what if it was a random customer that came into my store and paid me with cash right then and there? How do I refund those individuals? I don't have an invoice for them. So you would just create a standard credit memo by either you could do this all 6 ways, right? You do it right here on the home page. You got refunds and credits right here. You can do the menu bar, right? Customers menu, create credit memo slash refund. You could go to the customer center, same thing. You got all the transactions right here, new transactions, refund or credit memo. Right click on them, credit memo. Manage transactions, you got credit memos. Okay? They're everywhere. Okay? Because you don't need to have an invoice to create a credit memo. So that's what I was trying to get at is if you didn't have an invoice. But yes, that was correct on how you did that entire thing. So you need to create a credit memo, right? Whether you're on the home page, okay? Um, menu, customers menu, customer center, or on invoice. Okay? What about a bad debt expense? What happens when customers don't pay me? How do I write off my bad debt? How do I write off my bad debt?
Um, use cash
No,
base account.
no, you are never
Okay.
going to use cash to write off bad debt.
Okay. From the list menu, select item list,
Okay?
and after this new item,
Okay?
and create on other chart.
Okay?
How to say? Okay, and called bad bet.
Okay?
Okay, and after this, code item from the home page. Um, from the home page, select refund credit.
Okay?
This open credit menu. Okay, create from refund credit button,
Oh, okay.
and we fill out everything.
What do you fill it out with?
Uh, fill out the credit menu memo as shown in the, like, it's just with the name.
Okay.
Hmm. And all the information, like what we have.
What's the most important thing that you need to put in that credit memo to write off the bad debt?
It's the
The
caption,
sales
like
tax.
What was that?
the memo,
The
the
sales
memo.
tax.
Okay, not the sales form. And okay, we
No.
are. Say that again, Kim. What did you
If
say?
your original sale was not taxable, your bad debt write-off does not affect the sales tax.
Okay.
That's not what you're looking for.
No,
Okay.
We put where is the memo, bad debt, with off. This is what?
Okay, not the memo, but where? You're filling out the credit memo, right? What are you filling in the credit memo with?
Um, the item
What
and
item?
the bad bed.
Yes, the bad debt item. Yes. So in this case, that's exactly what you're going to do. How? How is going to be, you're going to, first off, you got to find the invoice. Okay. So locate invoice. Okay. That you have the bad debt that's currently on. Then you're going to create a credit memo, right? And when you fill out that credit memo, you're going to indicate that that item will become a bad debt item. So you replace it with a bad debt item, okay? And then what do you do after that?
Um, when we okay, uh, like we put all the information with the name, like the customer name.
Yes, okay, I'm not talking about that, but keep going. So
Okay.
what happens when I'm done with my credit memo? What do I do?
Oh, what we do?
Go to the
Uh,
chart of accounts and create
No.
no?
Save and close.
Save and close. And what pops up when you have that save and close?
we put it under apply to an invoice.
Correct. Okay, that's the question I was saying is once you've done that, you're going to save and close and then you're going to apply a credit memo to invoice. And that's how you write off the bad debt. Now, Ken, what Orlando you're trying to tread on is before creating the bad debt expense, you need to have the bad debt expense account and you need to create the bad debt expense item. Yes. But that happens before you even start the bad debt in the first place. Okay? Good. All right. How and why to create customer statements. Let's talk about the how and then we'll talk about the why. Well, actually, let's talk about why. Why would you create customer statements? What's the purpose of customer statements?
The statement is gonna be everything we need. Like whenever we need invoice or anything, we will be having the customer with all the information, like what we did with the customer, like what
Perfect.
the job.
Good. Customer activities. Yes. That's why we send them because it's a list of customer activity. And it also will tell us also account balance details. So if a customer owes me money, it will tell me right away. Now, how do I create a statement?
We could go to from the center, like from the estimate.
It's not an estimate.
Oh, like from the customer.
From the
Uh,
customer, what?
okay, a second. I'm just confused. Okay, we go to homepage,
Homepage?
click to a statement
Good,
icon,
good.
and we go to
Nope, that's correct.
create, create.
That's it.
Okay,
Yes, say how. Homepage.
this is how.
Yeah, yeah. You
Oh,
go to the homepage and click statements, and you're already creating the statements.
okay.
Yes, good. Now that's not the only way. Don't forget, you need to be able to maximize the different ways, and this one only has 3 ways that you can create customer statements. Okay. We're kind of short on time, so I want to make sure we go through everything. Chapter 5, obviously, we haven't gone over Chapter 5, so I am going to hold that off for the next time. Next one, Chapter 13, how and why to create estimates. First off, what is an estimate?
An overview of how much the job would cost.
Okay, overview of how much the job will cost. Okay? Now, who are we applying these estimates to?
The customer.
Good. Will cost the customer. Okay? All right, so then that's the what? That's the why. Okay?
How we go to customer menu and then choose create estimate.
Okay, that's one way.
Mhm. Estimate icon on the home page.
Good. That's the second. No, okay, good. That's the second way.
And estimate we could go from what is called like I believe the account. I opened it from different way yesterday.
Okay, well, that will, in this case, you need to explore all 6 ways. Okay, so how, right? One way could go to the home page and you're going to click estimates, right? But like I said, there are more than just one way. In this case, there are 6 ways, so make sure you explore that, but that is correct. Now, how and why to create sales orders? Why would you create sales orders?
Sell order to put all the expenses.
No.
No?
Customers are not expenses.
Why would you create a sales order to document the
Not to
transaction?
document,
No.
because we can document that by invoicing, correct?
Yeah.
So why would you, okay, so here, in this case, right, maybe I'll give you a better question. Tell me this. If I'm trying to create something for a customer, right, a customer wants a quote for me. What is the difference between an estimate versus a sales order?
The estimate is there's no transaction involved.
A
Where the
sales
other one,
versus, no, a sales order is there is no transaction involved either.
oh, okay, got me on that one then.
But you're treading on the right way. But why would you use an estimate over a sales order?
So okay, to track the order from customer while you are purchasing or filling the order.
Is that for a sales order or for an estimate?
No, this is for sale order, you said.
Okay, sale order, okay, to track an order, okay.
Yeah, from the customer.
So the sales order records the detail of what you sold them.
No.
No.
So unluckily, estimate sale order have been agreed upon and will allows end up as invoice.
So let me rephrase this question that I'm asking here is, what kind of customers would I be doing estimates for versus sales orders for?
So the book says that the sales order is not usually used. They're both optional, right?
Correct.
So it's a non-posting entry
They
used
both
to
are non-posting entries.
non-posting entries. Okay.
Okay, but
So
what's
the sale order is used as back list.
so my question is, what kind of customers do I create these forms for, especially for my estimates, right? What kind of customers am I looking to use estimates for? What kind of
New.
customers? New.
No customers.
But what now are these customers? You say they're new, right? But are they for sure customers?
No.
No, they're only for potential customers. So therefore, is this a guaranteed sale?
No.
No. So that's the question I was trying to get at, is that you only tailor this to potential customers. Okay? And that means not a guaranteed sale.
So estimates and sales orders might not become invoices, right?
Sales orders do become invoices.
Oh, they do?
Yes, that's the difference.
Oh, okay.
Okay, because estimates, right? We can have a whole bunch of people that says, I just want to quote. I just want to know what you provide, what your services are. But is that a guaranteed sale? No, because they could say, oh, I found someone who's cheaper. Or, no, I'm not interested anymore. Your prices are too high. Etc. Whatever reason that they say, oh, most cases, some customers say, I don't need it. I don't want it anymore. Is that a guaranteed sale? No. But it is room for potential sales because you can always use that to call those people, say, hey, are you sure you're not interested? We have a promotional sale. You entice them to try to bring them into service. However, that's not a guaranteed sale. Where a sales order is when a customer wants to buy a particular item and it is either pending or they're going to purchase it. So a common use of a sales order is what? Do you guys remember the example I gave in class?
This is for inventory,
No.
no? Checking inventory?
It's a higher guarantee of a sale.
It's a higher guarantee for yourself, but why? What makes it guaranteed? Because I gave you an example class. Why would you use a sales order?
The customer came to you, right?
Correct.
You can check your inventory from the sales order.
No, you cannot.
Oh, no? I mean, you will ask the people handling your inventory if you have the items in
Okay.
the sales order.
Okay. So what would that sales order potentially become? If it's a guaranteed sale, right? So in this case, I'll just tell you because we're
Are
kind of
they
running
putting
out
a
of time.
deposit down?
No,
It's a pick list for the warehouse people.
no, it's not a pick list for a warehouse. I mean, you can use it for that, but in this case, if a customer wants a particular product, right, and you submit a sales order because they ask you for that product, but yes, you do need to check your inventory. But what if you don't have that inventory? Then you can submit a sales order to purchase those items that are not there because it's a guaranteed sale because the customer wants that product. So in this case, you can use sales orders for backup orders, okay? Or for, if you have a particular product but you don't have it in stock, you can use that to create the sales order to back order or to get some more available items so you can provide that customer the product. So that was the example I said in class, right? If you didn't have the camera that this person wanted, you can use the sales order to create a purchase order so then you do have it to give to the customer. Right? Very common of a lot of things, right? Even Amazon does it, right? You submit your order. That's considered a sales order, right? But can they tell you, okay, well, give me 2 days and I'll ship it out to you? That's the same idea here. It's a guaranteed sale because a customer's coming to you to order something from you. That's a guaranteed sale. It's not like they're asking questions about your company. They're not asking how much your product is. They're buying the product from you. Okay, so that's the difference. Okay, how? Same way, if you can create an estimate, you can create a sales order. Okay, so I'll just leave that one. So you could do homepage and create the sales order that way. So remember, the difference between them is one is a guaranteed sale, and one of them is just a potential sale. Okay. How do you do progress invoicing? Well, first let's talk about what progress invoicing is. Well, what is progress invoicing?
The progress invoice allow you to charge your customer a portion of
Okay,
the total estimate
good.
for the state.
Excellent. Allows to charge customers for a portion of an estimate or a job. Good.
How do we create it?
No. In this case, you would have to activate it, and that's pretty much it. So I'm not gonna talk. I'm not gonna test. I'm not gonna talk about that. That's something that you need to be able to do on your own. Is to, because you would have to activate it. And last but not least, okay, how to record a customer deposit?
Record.
On the homepage?
Can you do that? Can you record a customer deposit on the homepage?
Let's see.
From the banking area,
Oh, okay.
Okay, banking area, what do you do?
click on record deposits.
No, that's only if you collect money.
Oh,
That in particular, that is more or less can be a step in the process, but isn't how you initiate the customer deposit.
Sorry, what is the question?
The question is, how do you record a customer deposit?
Customer record. We just did it.
Yes, we just did it yesterday. Yes.
Yeah, it's. I just did it today. I could find
Go
record.
to the customer payment window.
Go to the customer payment window. Which one? Which one is that? The record, the receive payments, or
Yes, wouldn't that be it? Because you're receiving the payment.
no, because receiving payments only stem out from invoices.
Can you repeat the question one more time?
How do I record a customer deposit?
Customer payment window. Verify that your screen matches. Click Save and Close to record the close the customer center. From the customer center?
No.
No.
Uh,
Okay. Depositing checks and cash.
a credit bank, something here. Record deposit.
No.
Depositing checks and cash on page 65.
We are not in chapter 3. We are in chapter 13.
Oh, right here.
Yeah, chapter 13. When you want to record the deposit, correct?
Record a customer deposit, meaning if a customer paid me in advance for services that I have not provided, how do I record that?
We go to record deposit
No.
and we look for the customer.
No.
Okay. We go to invoice.
No.
you have to create a new account in the chart of accounts
Good.
Applying the deposit.
and label it as other current liability.
Good. So first you need to create the customer deposits account, and what else do you need to create?
An invoice?
Not an invoice,
Estimate.
not an estimate. We just did this yesterday. Okay. So in this case, this is chapter 13, recording customer deposits. So if I ask my customer, hey, I require a 50% down payment on your services. So that means you need to pay me in advance to save the spot or save the people that you reserve them, right? So in this case, I'm collecting a customer deposit from them to put on their invoice for when I do bill them in the future. How do I record the customer deposit? How do I record that the customer gave me an advance payment, a down payment?
Is it
You have to
report?
create a new
No?
account and name it customer deposit.
We already got that first part right here. What else do you need to create? You don't
Is
stop
it
there.
report menu?
You
And
don't
after this,
know
choose
none of that.
method.
How do I create my invoice? What do I need to use? I can't use accounts. I have to use a particular thing.
For to create the invoice.
Correct.
Oh, it's like from when we open the estimate and we could like go to in the top and
This is not an estimate. No, this is not an
no.
estimate. If I okay, I'm trying to record someone paying me money in advance for services that they agreed to, because I required a 50% deposit. Now, Orlando, you're on the first part. You need to have the account. What else do you need to create?
You have to create a new item and
You
name
have
it
to
as
create
customer deposit.
the item. Yes, so you can put this on the invoice. You need to create the item because invoices can only allow you to put items, not accounts. So again, you need to create an item with a customer deposit. Now, from there, once you have that, how do I collect the money?
Other current library.
Okay, we're done with accounts and creating the item. How do I collect the money from the customer?
Create a sales receipt.
Create a sales receipt. Good. Because in this case, I'm not going to bill my customer, right? They're paying me for half the invoice right now. So that means I'm collecting it at time of service. So in this case, I'm going to use and record a sales receipt. Okay? Now, what do I do next?
We put an item number, customer deposit,
Okay, that was on the sales. Okay,
and after this, we put all the information we need and use for service. Okay, we go to like account number we put and okay, and after this, close the item list.
we're done with that. We're done creating the account. We're done creating the item. We finished recording the customer payment, right? We collected the money from them. Now,
Now we get
how do we apply this customer deposit?
sale receipt.
We already did the sales receipt.
Okay.
What step comes after the sales receipt?
You put in all the information.
Where?
You put in the customer, and then the date and
Where? What form? Where am I putting this
Invoice.
in? You put it on the invoice. Okay.
Yes.
Then after you collected the money, you're going to create the invoice, right, with all the services and everything. And then what's the last step you need to do to finish up this invoice to represent that the customer had paid for the services already in advance, or what do you need to put on the invoice to reflect that a customer deposit was collected?
You have
Refresh
to
the
enter. You
blanket
have to
sheet.
enter.
Go ahead, Orlando.
You have to put a line in the invoice as a customer deposit.
Correct.
The total amount.
Correct. So in this case, once you create the invoice, you're going to add the customer deposit item to record the customer deposit and apply it to invoice. Yes, you could be
Deduct it to the total.
Correct. And it will deduct from total. Excellent. Okay, so again, we just did this yesterday. Okay. All right, let me see. We still got, okay, 10 more minutes and then we'll wrap up the rest, okay? We'll wrap up the rest in 2 weeks. Now, I do suggest you to do this now. Just because we don't finish this today in class, that does not mean this isn't a guide for you to finish up on your own. You guys could use this as a means to study for your exam. Okay. So in this case, I do not have time. We will only have 10 more minutes left. So let's see as far as we can get. So purchasing. This part right here for just expenses, we'll cover this section right here. And then let me see. You need to fill out this section. Payroll we didn't fill out, so I'm gonna highlight this whole section right here. So let me go ahead and briefly go over this. Purchases. So chapter 8, obviously, we're gonna have to come back for. Okay. Payroll, we'll for surely have to come back for that because we haven't talked anything about payroll. Okay. Let me see. Reports. We didn't talk anything about reports, so we'll have to come back to this one. Basic accounting. This is definitely something you should go over because chapter 1 is part of your exam. Anything that has to do with chapter 14, no, you're not going to need to know this. Okay? So I'll just highlight what we need to come back for. So in this case, can you answer this portion right here for customizing QuickBooks? Yes, you can. Here's another chapter 12 here. Yeah, so you can fill out that part. You can fill out this part, chapter 1. Chapter 14, no. So we'll have to come back for this one. Okay. And at chapter 6 as well. Yeah, you can't do chapter 6. You don't have chapter 6 reports. Okay. And that's it. So then you get, so we didn't finish up to everything, but you can do the rest on your own. Again, we'll come back to this in 2 weeks from now, but let's go ahead and try to answer this last section right here, which is chapter 4, expenses. So who should be listed on your vendor center? Okay. Who?
Customer.
No. We're talking about
People
vendors.
people you buy from.
Good. People you buy from, right? We call those suppliers. People who you buy from. What else?
Suppliers.
We got that already.
Uh, the bank account.
Okay, the bank person, yes. And what does the bank do for us?
The bank is like the credit, everything, the money, payable.
What do they do for us?
Services.
They provide services. People who provide services. Excellent. And then last but not least, your 1099 contractor workers also fall under here too. Okay? Because 1099 week workers, all you do is you record them as an expense because all you do is say, can you do this job for me? And I pay you 100% of whatever you make. Okay? So 1099 workers are going to be your vendors. Okay? All right, how and use to navigate the vendor center. That will be the same concept for the customer center, right? Understanding how the vendor center is different from the customer center, right? What transactions that are involved with your vendors, right? How do you navigate? How do you add people? How do you record bills? How do you pay your bills using the vendor center? That is what this is, how to navigate. So again, This part says the different workflows from the working purchases and how each workflow works. So in this case, I'm only focusing on just this portion, which is entering bills and using bill payments, right? There are many ways that you can pay a vendor, right? So one of them is on an account. One of them you can physically write a manual check. One of them you can use a credit card. Or the other one you can use a debit card. Yes, you can use a debit card. So let's talk about the different ways. So in this case, if I'm entering a bill, okay, how do I enter in a bill?
Like in paid bill or any bill?
If you received a bill from a vendor, how do you enter it into QuickBooks?
You go to the vendor center and then you go to new transaction and it says pay bills.
Excellent. That is one way that you can do it. Make sure you maximize all the capabilities because there are 6 different ways that you can enter in a bill. Now, what does entering bills do with the accounting behind the scenes? What does it increase?
Your accounts receivable,
Not receivable,
payable.
accounts payable. So in this case, entering bills will increase accounts payable, which once again is a liability, right? It's increasing the debt that you owe because you're not paying for them now, you're choosing to pay them later. All right? So what does bill payments do? Right? What does paying a bill do?
Lowers it.
It will decrease accounts payable. Okay? Now in this case, what's the rule of thumb here? Can you use a check to pay for a bill?
Yes.
No, you cannot. Why not? Why can't you use a check or why can't you use the write a checks function to pay a bill?
Hmm.
Okay, so in this case, in order for you to decrease your accounts payable, you must use pay bills to decrease your accounts payable. Okay, because in this case, if you use the write a checks function, I'm not talking about actually paying your vendor. Yes, you can pay them with a check, you can pay them with cash, you can pay with a bunch of things, right? But you cannot use the write a checks function in QuickBooks because it will not associate that with a bill. Now, again, if you remember in chapter 4, I attempted to use the write a checks to pay a bill. And what did it give me a note? It gave me an error code saying, no, you cannot use write a checks function to pay for a bill. Okay? All right. So then what about using the write a checks function? Okay. Yes, you can pay your vendors by writing a check using the write a checks function. And how do you do that? Well, you have 2 options, right? You got the home page, right? Under the banking section, you have the write a checks function. Okay? Now, what does using the write a checks function do? Right? It creates checks using the QuickBooks application, right? So this is more or less if you are paid into those kind of services, right? Where you purchase checks from QuickBooks and you can manually print on them is your option to use the write a checks window. If you're writing a manual check that you get from the bank, right? Can you use the write a checks window? Yes, you can, but the check number is obviously going to be whatever the check number is. But the most primary use for using the write a checks function is to more or less write physical checks and print them out. Okay, so used to print checks manually. Okay, FYI there. Okay. Now, how do I use a credit card to pay for my credit card transactions? So if I want to pay a vendor for something that I bought, how do I use a credit card for this?
Can you repeat the question, Lynn?
How do I use a credit card to pay for to pay to my vendors? How do I use a credit card to pay for the things that I buy?
With a purchase order?
No.
Is a credit card the same as cash? No.
Answer this question in real life terms. Is
Okay.
cash and credit cards the same thing? It definitely isn't.
No, because your credit card is just credit.
Correct.
Cash is cash on hand. Okay.
Correct. So in this case, by looking at my functions on my QuickBooks, how do I use a credit card to pay for things?
In the
Watch.
homepage from the banking area, you can enter credit card.
Good. Right? You got the home page, banking section, enter credit card charges. Okay? We also talked about how you pay them. How do you look at your transactions after you charged your credit card? Okay? So in this case, there is another way that you can enter in a credit card transaction. Okay? So, yeah. So that's using credit cards. Now, how do I use a debit card? And then you can also say, or if you use Zelle to transfer money from one person to another bank account. How would I be able to record a debit card transaction if I paid for stuff using my debit card?
Like when we put the checking account and all the information, and they will be take it from the debit card.
What key feature do I need to do in order to make the difference between a debit card transaction versus a regular check? Yes, that's true. You're going to be using your checking account. But how do I make a difference between using my debit card to pay for a transaction versus using a check?
It's a home page and bank, and we put all the information they need.
Where?
Home page,
Homepage.
bank.
Okay, what icon out of the 6 options you have under the banking menu? What information are you going to be putting in?
Like the checking account.
Where?
And,
Where? There's only 6 options you can choose from.
mm,
where in the world am I going to be entering in my checking information in these 6 options I have here?
Check register.
You can go to the check register. Okay? So there you go. Oh, I put cash on hand. Checking register. All right? So I'm here in my check register. Now in this case, I still haven't used my debit card. So how do I enter in that I used my debit card?
It's we put the number.
Does a debit card have any means of a number?
It's like the account number.
Okay, so we know that we're going to be taking this from my checking account. Okay, so let's say I want to pay something with my debit card. Let's
The
say
account number.
I want to pay what is it? Orlando properties, right? I want to pay them rent expense. And because I'm already in my checking account, how do I say I'm using a debit card for this transaction?
We go to menu. Memo.
No. This is in your book. It's the very first page when we're talking about using write a checks function. Okay, so let's say I want to pay $1,500, but in this case, I want to use my debit card to pay for this transaction. How do I indicate that?
Like same the estimate.
No. How do I, so as you can see right here, right? So in this case, I made a bill payment. I wrote a check, right? I paid for my tax. I wrote a check. I made a deposit. How do I make a difference here using my debit card instead of a check?
Oh, customer estimate.
No. Okay, since we're running out of time, this is what you gotta do.
You can click on the item National Bank and it will open up, I think.
That's the credit card.
Oh, you cannot change the credit card into the debit card from there?
Okay, so you're saying we should use the enter credit cards and change this into our debit card?
Yeah, add new, no?
No. Why is this? What's the difference between a credit card and a debit card?
The debit card, it's like our money. The credit card, the bank money.
Flip that around.
Debit card is like cash, credit card is a liability.
Correct. Credit cards is money that you do not own. So by you putting your debit card in here, you're saying that you owe the bank money by using your debit card. Is that true?
Yeah, okay.
So no, you cannot use the enter credit cards transaction here. All right, since we're running out of time, I'm gonna just go ahead and give you the answer. Okay, so when you need to use a debit card transaction, right? Okay, so you have the choices. You can either use the check register or you can write a check. I'm gonna go ahead and use the write a checks function because it's just gonna pop right into my checking account anyway. I've already selected that I have checking, right? Now, to differentiate between me writing an actual check and using my debit card is by entering and changing this right here. I did show you this in class on Thursday, okay? So in this case, instead of writing a check number, I'm just going to write in that this is a debit card transaction. Okay? So it does not affect my checkbook itself. It's not me creating a check that needs to be printed out. This is just me recording that I used my debit card to record this transaction. That's it. This is also going to be universal for entering an EFT. If someone decides to sell you money, how are you going to record that in your books that's saying that you received money? I could do that by using a transfer. Okay? And if we want to transfer from one account to another, I'm going to show you that in chapter 5. Okay? So other than that, that's the way that you can do it. So if I wanted to say I used my debit card to pay for this transaction, I would just put debit instead of a check number in there. Even though it is going to be connected to my checking account, well, isn't that what a bank card does? It takes it directly out of your checking account because you're using a debit card. All right? All right. So other than that, it's already 10:51. I'm going to go ahead and let you guys go. And we'll just finish up the rest of the study guide in 2 weeks. But like I mentioned before,